everybody and welcome back to my channel. In this video, I'm going to share with you a simple approach to day trading the Forex market. We're going to go through a live trade that I took in my account with the 5%ers step by step. So without further ado, let's get straight to it. Before we jump onto the charts and break down this trade step by step, I've just logged into my trading platform here in MetaTrader 5 so that you can see the trade that I took in the history panel. So I took the trade on Monday, the 11th of March. It was on pound against the dollar. We'll talk about the time frame and the strategy in just a moment, but I just want to show you the live trading data here so you can see that this was a trade that I took in the live markets where I made a profit. Now, this was actually the only trade that I took this week, and this was based primarily on the larger time frame analysis, which I will show you in just a moment on the charts. And if you watch my channel, you'll know that I juggle day trading Forex full-time as well as being a full-time mother to two children. One is currently 6 months and one is just over 2 years old. And I actually took this trade as I was in the car about to get out to do my weekly shop at the supermarket. So I'm not saying it's easy, but it's certainly possible to day trade in this way whilst juggling other things. But that's because I did the main bulk of my analysis when I had some spare time at home, and then I simply took the trade from my mobile phone and executed it when I was out and about. So we're going to go through the entire process of how I took this trade, starting with step 1. And step 1 began with my overall weekly analysis. I was trying to gauge a bias for the week. Now, before I even touched the charts and looked at the technicals, I wanted to consider the fundamental analysis. So to do that, I jumped onto Forex Factory, which is a free resource. It shows any upcoming economic news and events that are planned for the week. I have this filtered so that I can just see the data for pound and dollar because that's the currency pair that I trade, and I'm only interested in the high impact news events. Now, as you can see here, we do have quite a lot of news coming out, but for the Monday, which is the day that I took the trade, there was not any news planned that day. So I knew that my strategy for trading was going to be based purely on the technicals. However, moving on into the week, Tuesday, we had a lot of upcoming news, Wednesday, Thursday, and Friday as well. So there was definitely going to be some movement coming in, some volatility based on the results of the news. Step number 2, once I had established my fundamental analysis bias for the week, my plan, I then decided to look at the technicals. Now, the technicals for me, especially at the start of the week, always starts on the larger time frame, the daily time frame. It holds the authority. It's what most of the banks, the institutions, and most traders out there use. And as we're going through this trade review step by step, if you've not got a trading plan already, I definitely recommend you to create one. It helps you to stay disciplined when you are trading. In fact, I do have a free trading plan template available. You can download that from the link in the description below this video. So here's the daily time frame for pound dollar, and before we do anything, I'm going to just take this back in time so we can go to the beginning of the week and also remove my current drawings here. And as you can see, this is how we started the week. It was very interesting because last week we had a very strong push up, which more importantly closed above the previous high here. So we had a result. Last week we achieved a new high. That's very important, especially looking at the way the candlestick closed on the Friday. We had a strong push up, but then we had this large upper wick forming. Now at this point, the first thing I thought when I looked at my chart was that price had achieved, it had accomplished something, it had broken a new high. So the chances are this week we're going to get the backlash of that. I like to think of it in more of a mindful way. I'm very much into balance, into yin and yang, and for me it's like the in-breath and the out-breath of the market. Last week we had this big push out. This week we're likely to want to inhale, pull back, gather some energy, ready for another push. So looking at the technicals alone, I had this kind of more short biased mindset. I'm not saying I'd be short long term because obviously we are in an uptrend, but it's likely we're going to see a pullback. Now, the question may be, well, if price does pull back, if that happens, where is it likely to pull back to? And that's what I like to do on the daily, is just gauge these points. So I go from the low of the previous pullback and I use my Fibonacci tool. I drop it at the high using the bodies only. And these 3 lines are the areas of interest for me, the optimum trading levels, which I will just draw out with a rectangle so I can delete the fib tool. So that is one place that price could pull back to. And it also coincides with an institutional price level, the 1.2650 level. So there's a couple of reasons that price may pull back to that level. But nothing's ever certain in the markets. It's just always good to have these drawings and these analysis in place. Step 3, we move into top-down analysis. Now we've kind of already started this with step 2 because we've started with the daily. From the daily, I like to carry on coming down the time frame. So next I will drop to the 4-hourly time frame. Now, I don't really do a lot here. I just get more information from the candlesticks and it helps me to just fine tune my trading plan. And from this point, what I'm most interested in, looking at that same previous high, once price jumped above that high, we haven't had any pullback. And this was a previous deeper pullback on the 4-hourly as part of this swing here. Obviously, there's the rectangle box from the daily, which is taken from the low of the pullback completely. So what I like to do is take the next sort of deeper swing from the 4-hourly time frame and do the same process. I drop the fib at the low and I place it at the high. Now this 3 level on the optimum trade entry for the fib is very close to the daily. It's just a little bit higher up. And I also like to mark this level. I'll always attach more authority to the daily because in my opinion the daily is the most important time frame. But if I get some kind of pattern forming at this level using the 4-hourly fib level, then that could also give some kind of weight to a trade plan for a long continuation. But I'm not really expecting that to happen this week. I think that this week we'll get a pullback down to these levels. And once I've finished on the 4-hourly time frame, I then drop to the 15-minute time frame, and depending on what the current day is saying, I will usually execute into the markets using either the 15-minute time frame or sometimes even the 5-minute, maybe even the 1-minute. It just depends on what is happening at the current time. I generally trade the New York session because I like to wait for the afternoon news to come out, because for me that's 1:30 here in the UK. However, we've just done our fundamental analysis. I know that there's no news due out on the Monday, the day I took this trade. So once I had gotten up in the morning, I was pretty much looking at the charts and looking for a place for an entry. Step 4, once I'm on the 15-minute time frame, I like to look at market structure and get an idea of market behavior. And for this, I'm looking at the most recent candlesticks. So that's why I've zoomed in now on the 15-minute time frame. This is the data from the previous day, from the Friday. And what I am most interested in is we've been coming up. We made a high here, we made a low, and then although we had a little bit of consolidation here, made this new high up here. And at the moment, price is just kind of ranging in between these levels. So the next step of my plan would be to look for a long in line with this, but not because I want to get long, because I want to watch these key levels to see what price is going to do. So let's get the Fibonacci tool out. From the low of the overall low here and to the high of the bodies, I drop my Fibonacci tool, and once again I'm looking at these 3 key levels. Now I set a rectangle tool to just highlight these levels, just to try to keep my chart tidy. And what I'm thinking here is that we might get a reaction from this point. At this point, I set an alert at this rectangle level highlighting the fib, because if that went off, I knew that price was in a key level. I wanted to see what price was going to do. So price came down to this key level for the fib, and at this point my alert went off. So I went onto my charts, and that was when I then kind of entered into a more active trading mindset for the day, which was around about 9 o'clock. For me, that's a good time because we are out of the kind of most volatile part of the London session, and I felt like this would be a good point to see where the dust has settled. Now, I'm definitely short based on my overall analysis that we have just been through. But once again, it's where is price likely to pull back for a short? Well, what I'm most interested in is we're starting to get some swings forming. Now, we had an open here, we pushed up, price instantly came down, pushed up again. We didn't break this high of the day. We had a double top here. Price pushed down. It made a slightly lower low. We had another pullback here, and then we had quite a large drop down to the downside. So the momentum for the intraday period is going down. And to calculate a good place to get in for a short, I did 2 things. Firstly, I added my institutional price levels. And here we have one right here, which is where we had this consolidation around. Now we're underneath this, so I thought that if I could get shorter on this level, that adds an extra bit of support to my trading plan. And the other thing that I did to calculate my entry was once again using one of my favorite drawing tools, the Fibonacci retracement. And for this, I went from the highest swing of the day using this intraday data, and I dropped it to the lows. Now the three levels, as you can see, end up being just above this institutional price level. So I set a trade plan to get short at this lowest point of the fib, which was just above the institutional price level at 1.2851. My stop was going to be above the high of the day, so I used a 15 pip stop. And as per my targets, I used a 1.5R profit loss ratio, so it was breaking the swing and it was into this fib level here, and this is what price did. As you can see, this was quite a nice result on this trade. I ended up setting the trade, I can't remember the exact time, but it was somewhere in this period here before it obviously retraced up and triggered me in. But I was definitely in the car because I remember placing it on my phone before I went into the shop. Because afterwards I had that split second thought of, I hope I did that right. But I had my target set and my stop set. And then once we were having lunch, I checked my phone and it pretty much had just hit target. So it was a really nice win for the day. Definitely a win for multitasking with two boys. But as with trading, you can always do better. You can always learn something. And this is something that I learned from this trade. What do you think? So look at this trade now. Remember this trade plan, the way that I got in at this level here. In fact, let's remove these bits of drawings and let's just go back to the 50-minute time frame just so we can see more data. And you can see in more detail the overall context of this trade. So that's my short I took on the Monday, going short after this huge push up. This down here, this rectangle, that was my first level based on the 4-hourly time frame analysis where I thought price may return to. And this was the trade I took. Now here is a screenshot that I have just done before starting this video with you guys today on the Friday on the 15-minute time frame, and this is how the week progressed. This is what happened this week. And once again at the beginning here, this is my entry that I took short. I got out around about this level here. Look how much price came down. And this is definitely a lesson for me because although it's been a choppier week, it's been a pullback week, like I said it might be. Hasn't come to that fib level just yet, but there's still time today for it to do so. But the thing I thought was interesting was that I could have definitely doubled up my position and held a runner for the week. It's not something I've done a lot of, something I'm definitely going to consider in the future to try to capitalize on more profits. If I had done that with this trade, targeting the low down here, at the current moment of recording this video, I'd be sitting up an extra 2% on my account, so it's certainly something to consider. But here is the dashboard for my account with the prop from the 5%ers, and this week I am another step closer, and that's why I'm really enjoying this disciplined approach that I have at the moment to day trading. I've been following this approach all year so far, and it's working really well. As you can see on the chart here, you know, I'm having those losers come, but overall my performance is in an uptrend, the way that I want it to be, the way that I want it to remain. And that is primarily from having these disciplined weekly targets and sticking to them. I had a couple of options this week to get into a couple more trades as the week progressed, and I chose not to do it. If I had, I would have made a little bit more profit, but I'm glad I didn't, because the importance for me is in keeping disciplined, and I'm happy to just keep making my weekly target because I know that over time I'm going to hit my long-term target, which in this case is the 10% for passing this challenge for acquiring a $40,000 account size. That's as part of this program I'm currently on with the 5%ers, the Hyper Growth Program. And once I've done that, what I'm most excited about is the scalability. Have a look for yourself. I'm currently here in level 1 with my 20,000 account. I'm trying to hit $2,000 profit. And once I do that, it scales up to 40,000. But keep following this process of hitting 10% profit and the account keeps getting doubled all the way up to 4 million. Now, my theory is that if I remain organized and disciplined and hit my weekly target, rinse and repeat, yes, it takes a little bit of time. Trading isn't a get-rich-quick scheme, but from being organized, from being focused, from being disciplined, you can certainly get rich from it, and I want to prove that for myself and for you guys. So if you've got any questions from this video, do let me know in the comments below. If you've enjoyed it, please hit the like button so that I know to make more videos like this. And don't forget to subscribe to the channel below, and I'll catch you in my next video. Thanks for watching. Bye.